controlling interest, that means IFRS 10. Under IFRS 10 consolidation standard, right? The controlling interest means now you don't need to be the owner of the asset. If you are in control of the financial and operations of a particular asset, then those assets can be featuring on your books and the depreciation for that will be taken by you. So in that case, if those assets are featuring in your book and you are going by devaluation method, then you will apply this fair value on them also.
Probably one question was if you fair value, if you have got level 1 price, level 1 price, market price is there, so it's level 1.
Yeah.
But since it is a controlling interest, so it may command some premium.
No.
So while doing fair valuation under level 1, whether one need to add premium?
No,
on
you can't add any premium. As a matter of fact, this discussion took place in the Microsoft shares case. Of course, it was under 157 in the US. What happened was that major part of Microsoft shares, if they are sold in the market, the share price will fall, it will not increase. So the question of Microsoft commanding a premium was smashed down. They said, if at all you have such a big controlling interest in your shares and today you go to the market to offload those shares, your share price will crash. It will be a devaluation, not a upward valuation.
No, but the fair valuation standard goes by market participants.
Yeah. So the market participants,
if we have the control, so control have a different value. I mean, you see, if somebody buys non-controlling interest, there may be a discount maybe. But if it is a controlling interest, so controlling interest means you are getting the control of the company. So probably there is a para 30 or 34 in 113, which is talking about the controlling interest. Probably see your date somewhere.
I understood what you are talking about. Is there ad hoc in this? It says that
which is paramount 69.
Here it says in some cases those characteristics result in the application of adjustment. That means you're going to take it from level 1 to level 2 now.
Level 2, level 3.
Such as a premium or discount, that is a controlling premium. If you read the basis of conclusion, it says premium, apart from that here, premium or discount that reflects size as a characteristics of the entity's holding, specifically a blockage factor that adjusts the quoted price, etc. in a normal trading volume. Okay.
So it's now a characteristics, it's not a unique of account, it's a characteristic.
No, it's a characteristic. So if in your stock market you have a blockage factor concept, I don't know if you have an Indian stock market. You have?
There is a block deal is separately shown in the financial, share market also. The block deal.
Yeah. But do you have the limits that more than this?
Circuit is there, no?
Less than. Yeah. I don't know how it works here. Then I need to consider that also when I am accounting for this premium. And the justification has to be described over there. That has to, and what is the extra benefit that will flow to the company because you have a controlling factor. Because ultimately your fair value is according to your economic benefits to the company. So if you can justify all that, then yes, you can take a premium according to this. If you read in the basis of conclusions, they have given a very detailed description of this part.
Because in Microsoft, maybe Apple could have bought the controlling interest. Because the company bought the controlling interest.
No, in the, yeah, that is also true. But, yeah, but if you read into that case, they said that you're not justifying your premium because you are a major shareholder there controlling the entire company, and if today a market participant is offloading the number of shares that you have, you can't get the value that you have. So that is the reason in that case the FASB did not allow a upward evaluation. So basically they could not justify.
Maybe Competition Commission would have permitted that.
So here what is happening, you're looking at the restriction that blockage factors, the daily market trading volumes are not enough to absorb that kind of a quantity that you're holding. Then in that case, that's a restriction factor to the premium.
Any other question?
In level 2 and 3, how this fair value can be considered as fair, considering the subjectivity as
Yes, you can use the mic.
You see, his question is how can the value be considered as fair? Who needs to consider? It is the management which needs to decide which is the fair value.
they vary as from person to person.
Yes. But the management of the company is only one person, no? Whatever they decide.
What about the auditor?
Auditors, if you don't agree with that, you can express an opinion that you don't agree. But it is very difficult if they have all the documentation and if they have the workings of why they have arrived at this management judgment, which will be there, because now you will see in Ind AS, unlike our previous accounting standards, there is a new section which has been introduced. You have the financial statements, you have something called estimates and management judgments, and then you have the notes to the accounts. In the estimates and management judgments is a major drafting that you will have to do in the companies, because all places where any estimates or any management judgments are taking place needs to be mentioned there, including fair value. So if the auditors feel that is wrong because you're commenting on your entire financial statements, you can express your opinion there.
In case of Tata Steel, so long Mr. Ratan Tata was there was no impairment of porous assets. When Mr. Mistry came, there was impairment, and now maybe it will be returned back. So, auditors are the same.
I have no comment on incomplete information.
Yes, next question please. Any other question?
I think we call it today. I'll email you the presentation.
Can you say right now?
No, not now. I'll email it to you because there are some of the slides I've used as ISB slides. I have used them with their permission. But
We will internally email it to participant only.
Yeah. It can't be distributed because I'm a trainer
Okay,
with Switch Learning. Those slides are with permission from ISB. I can't give it to everyone.
Okay.
The content will remain the same. Don't worry about that.
So thank you, Binaji.
Colors will not be there.
So Binaji will be sharing her PPT. We will be sending you after we get from her. We had already sent an email to those who have registered online because their email ID were with us, and those who have not registered online, we have asked the office to take the email ID. Probably everybody has given the email ID, so we will send the revised. We will send to those tomorrow. We will be sending the email that will contain the PPTs which we have received from the speakers, and also the text of the accounting standards. And also we are sending the bulletins in the separate email. Yes.
Online subscribe name not included in the participant list.
Okay.
Then
So, sir, that we will take care of. We can talk offline, not in this. Yeah. Yeah. Any other problem, you can talk with me, no issue. We are very thankful to Binaji who has spent a valuable time and excellent presentation. I would request everybody to put your hands together for Binaji. May I now request Binaji to please come forward and offer a moment on behalf of all of us to her. Now it's time to hear from Mukherjee ji. I would request him to please come forward.
I will take your leave.
Yes, yes. Thank you, Binaji. Thank you.
Very nice.
Sorry.
I have learned a lot.
I'm sorry, I'm not.
I have just two questions. There are two questions.
Okay.
I can sell my old newspaper to the person who comes to me.
Yes.
Is that more advantageous market? Instead of going to Korea to sell the market, principal market?
Number one, is it your trading? If it is not trading, you don't meet the definition of asset.
Okay.
Right? So, India has one way. No question of favor.
Okay, see you.
Yes.
Anyone who will, if he do not receive any email ID, the mails, they can contact the Jyoti. You can call the toll-free number and they can talk with the Jyoti. Probably wait by 2 p.m. tomorrow. Thank you. Yes.
Good evening, everybody. Only two things are certain in our life: death and taxes. Now, this Ind AS 12 income taxes, it has implication for all other standards excepting this 12. Just like it said, it's diabetes. It's not a disease itself, but injures the whole body, each and every organ. First thing is, what is the basic rule for income tax? The basic rule is, everything is taxable what is not mentioned specifically as exempt. And conversely, nothing is deductible what is not specifically mentioned as deductible. Yes or no? This standard having application, now the thing is, I do not know, everywhere I find most of the books, most of the international university question papers, even ISB standard, these examples, they avoid. Just for simplicity, deferred taxations are avoided. But I believe, do the thing you fear, then the death of fear is certain. You simply, in the practical world, you cannot avoid these income taxes. Next. See, this is the same old thing I was talking about, accrual basis. What it says, that if you want 10 rupees income tax, 30%, that means 3 rupees is your income tax payable. Pass one journal entry along with that. If you spend 10 rupees, 3 rupees your actual expense is 7 rupees. So here you have to follow accrual basis. That means so what? IFRS financial statement, profit or profit and loss account along with other comprehensive income. 3 things: income that should have been received, expense that should have been paid, income tax that should have been paid. So certain things are all become misnomer. You cannot use this expression, profit before tax, no. You see any financial statement, I told you earlier, hardly 5 to 6 pages accounts and 190 pages only all disclosure, and everywhere there is para reference. You have only one problem with Ind-AS. You need to know the paragraph reference and what is the meaning of that. What is the journal entry of this and how it affects my financial statements. So there is no question of profit before tax. It is accounting profit. See this accounting profit. What is this? Before deducting tax expense. This is not before deducting income tax. So in profit and loss account, remember, just like what Devashish told you yesterday, proposed dividend cannot find a place. Same thing, there can't be anything as provision for taxation. So when you prepare the cash flow statement, these two things will not be there. There is no provision for taxation, there is no profit before tax, there is no EBITDA concept. This is accounting profit, you deduct tax expense, what you get is called profit for the period. What is tax expense? Aggregate of current and deferred taxes. That means what? I calculate my profit by applying accrual basis. That is 100 rupees. Current income tax rate 30%. I need to pay tax 30%. My tax expenses has to be 30. If I have paid less, deferred tax liability. If I have paid more, deferred tax asset. If it is not as per accrual, that means what? There are certain incomes and expenses which do not affect income taxes. There are certain non-taxable incomes, there are certain non-deductible expenses. That's the other thing. You will have to give one disclosure for that, that why they are not as per accrual basis. So the product of accounting profit multiplied by income tax rate should be equal to my tax expense. If it is not there, what are the reasons? You mentioned these are the incomes not taxable. For example, your dividend. So everywhere you will see the standard, they talk about repeatedly, it is affecting accounting profit or taxable profit or affecting both. It will decide. How it will look next? Income tax rate is 40%. So my tax expense purely on accrual basis. So this is the 5 things that will appear under tax expense. Next.
Deferred tax expense?
Deferred tax expense is, I am coming to that. Just wait. I believe in illustrations only. Just wait. I don't need to give you the answer. You will get it here. First two thing you remember, this is for the creation, and the second two is for the reversal. If I create something, I need to reverse in the future. Just to remember, these are the 5 things that will be there. Deferred tax expense is what? That as per accounting profit, my own calculation, if I pay less income tax, suppose I told you my accounting profit 100 rupees, income tax rate 30%. I need to pay 30 rupees income tax, I have paid 20 rupees. 2 rupees over deferred tax expense. So journal entry is deferred tax expense debit to deferred tax liability. Deferred tax expense is written up in PL and deferred tax will find a place in the balance sheet. Ultimately, if I save some money, I don't pay, suppose according to my calculation, in future I am to pay. Our problem is, that is, you go to the definitions again. Taxable profit. Taxable profit. Taxable profit. When we prepare accounting profit, that is what? I apply generally accepted accounting principles. I apply Ind AS. Okay? Why? I wanted to know what is the return on my investment as per my calculation. It is based on my own judgments. But when I prepare my taxable income, my emphasis is to show as little income as possible. How can I do that? I defer income as late as possible and recognize expenses as early as possible. So now the thing is, income tax department cannot say, don't understand accounts, and accountant cannot say, no, don't understand income tax. They are all merged together. They are having their definite set of rules. That this is how you apply your taxable profit on which you need to pay your income taxes. But I have my own way of making things. I follow Indian accounting standards. When there is deferred tax expense, what happens? Go back to this slide, Troy. How do I get deferred tax expense? It's a liability setting aside my profit. I create a liability setting aside my profit. Concept of conservatism, because if I don't pay now, in future I am to pay. I can't avoid. Opposite of this is what? Deferred tax asset. And those two are reversal of deferred tax. You see, deferred tax expense, first entry you see, deferred tax expense debit to deferred tax liability. When I am reversing, deferred tax is transferred to PL. Next. This is the big change here. Most of you have some idea about this. Probably AS22, I suppose, that old one. Huh? AS22. Now, this is the biggest change that we have to see. Because we record also events along with these transactions. Now, most people ask me, sir, is it very tough? The common issue we saw in the world is, it is notoriously complex. I say it is tough, no doubt, but the good news is, you are all accountants, very experienced, so you don't need to learn Chinese to play Chinese checker. This I believe. You can do it, no problem. But only thing, it needs a practice, I tell you. I tell you it needs practice. You will lose your sleep, frankly speaking. And without, most of the place I ask, sir, any book can I recommend? First you go through the standard, that is your book. Because every financial statement will have with the paragraph reference. So anybody coming to you, either your boss or your subordinate, you have to explain that this is the meaning of this is the journal entry, and how we apply this. These three things were not there. We need to apply different taxes on PL, fine. Then also on OCI, I need to know what is OCI. Then on changes in equity, there are some adjustments. Anything appearing OCI will have to find a place in statement of change in equity, but there are certain items which will directly affect equity. Some transactions affect PL, affects my accounting profit but not taxable profit. One example, dividend. Okay? One example tell me that affects my taxable profit, not accounting profit. Any example? It affects my taxable profit, not accounting profit. Yes, please. I can hear. Donation. It does not affect my accounting profit. It affects taxable profit only.
Provision for weighted deductions.
Yes.
Weighted deductions.
Weighted.
Deductions.
Yes. Make some simple example. Any simple example?
Benefit of industries in backward area.
Soja, simple. I know very little, sir. Simple. You bought some investment in shares, suppose. Okay. After 2 months, you sold it out. It doesn't find a place in PL. Adjustment is through retained earnings. Yes or no? But it attacks income tax liability. Certain things, they do not affect taxable profit at the initial occurrence, also they do not affect your taxable profit. When you suppose you issue debentures, convertible debentures, it will not affect your taxable profit, not affect your accounting profit. Next. This is the language, entire thing is based on tax base. Go through this, and if you say that I have understood, I will tell you, you have not read this. I am sure. If you say I have understood what is tax base of an asset liability, I will tell you, you have not read this. Yes or no? Please be frank. No. Yes. That's a very good frank conversation. Next one. Now you can say I have understood. It is okay?
Yes.
Huh? Please go back to the previous standard again. Now you go through. The tax base of an asset, go through. Not what is there in the box, just other than what is given in the box. Is it okay now? All of you clear? Next, now you go to the what is given in the box. If those economic benefits will not be taxable, the tax base of the asset is equal to its carrying amount. Okay? Meaning not clear. Next slide, slide number 7, I suppose 7. Example 3 you see. Loan receivable, no tax consequences. Interest element is separate. Now, go back. Previous slide 1. Tax base of a liability. Okay? Not clear? See example 4, slide 7. Can I go ahead? Slide 5. In the case of revenue which is received in advance, go through this. I have sold one Maruti car for 100 rupees. 8 rupees for the car, 20 rupees for the services will be provided next year. So I credit 80. And 20 rupees my revenue received in advance. Income tax department says, no, you have collected 100 rupees, you need to pay tax on 100 rupees. So, see this language, what is given. In the case of revenue received in advance, the tax base of the resulting liability is carrying amount 20 rupees, less any amount of revenue that will not be taxable in future periods. See example 5. Going to the next slide. Okay. Oh. Double Dutch. See the language.
Sir,
Yes, sir.
showing us slides are not available with us. So, if you kindly explain, neither we can see from here the screen of slides and printouts are not there, neither we can see. So, if you can explain.
Those who are facing the problem, there are some seats vacant in the front. So please, if you can come forward. Slides have been emailed to every person whose email has already been sent. So those. There are some seats vacant actually. आप लोग 4-5 सीट्स तो वैकेंट है ना, यहाँ पे भी है, कम से कम 10 सीट्स है यहाँ पे। आप लोग आगे आइए ना, जिनको प्रॉब्लम है, 10 आदमी तो आगे आइए।
So I go ahead. So temporary difference can be taxable temporary difference, can be deductible temporary difference. Very complicated language. I'm just making you understand what is this. Just wait for a minute. Yes. Accounting profit is converted to taxable profit. What we add? Deductible temporary difference. And what is subtract? Taxable temporary difference. Next. Deferred tax liability. That means I paid income tax less than what I should have paid. How does it arise, deferred tax liability? When the carrying amount of an asset is more than its tax base, there is a deferred tax liability. Opposite of that is deferred tax asset for an asset. Just take one example. See this, slide 11. this is deferred tax asset. Just the other thing. Okay, take one example. If I have charged less amount of expense, that means it's a taxable temporal difference. Because they have given the benefit, I have not availed of. Opposite of that is, so always remember that income taxes are to be calculated on accrual basis. This standard is applicable to all the standards. If you carefully go through Ind AS 12, you will see there is reference of PP, reference of impairment, mainly business combinations, consolidation. Then your, apart from IS 1, your share-based payment, employee benefits, everywhere it is, borrowing costs, every income tax everywhere it is applicable. So only thing you remember, that is, if I earn 10 rupees, 30% income tax, my earning is 7 rupees. If I spend 10 rupees, income tax 30%, my expense is actually 7 rupees. Provided I have excluded non-taxable incomes and non-deductible expenses. Okay? Can I go ahead? Yes. Please tell me the value of the goodwill.
See,
You said 3.
oh sorry. 8.
8.
8.
Goodwill is 8.
Yeah.
But here 8 is a difference between chalk and cheese. Huh?
We cannot consider fair value.
What is the value of the goodwill? 8 rupees. 3 rupees. 8 and 3, 8 and 3, 11 divided by 2, 5.5 average. Huh? Again I tell you, if you earn 10 rupees, your income is 7 rupees, 30% tax, 3 rupees tax gone. If you spend 10 rupees, 30% tax, actual expense is 7. How much it is? It is 3 or 8, which one?
Logically, it should be 3 because
In accounting, there is no logic. Every time you see, every time, how many surplus you get for service tax? You tell me, no, better, even practice, I am not. I am a theoretician. Throughout the world, any government from the core of their heart, they want to make income tax act very, very simple. But when they see so many people doing so many things, they end up complicating that further. Pagal kar deta hai. And this standard particularly, if you go through, thereafter you tell me. So, can I go ahead? How much I will tell you, if you get the right answer, then one singara and tea for you. Not at institute's cost. Other way around. You will give me a treat, all of you, one day, one person. So, confirm it is 8 or 3? 8. How many is it? 3? Answer is 5.5. Wait. I just read the balance sheet before writing the journal entry. Is it okay? I redraft the balance sheet of the subsidiary. Okay? Journal entry now. Is this okay? If you buy an asset for 10 rupees, your expense is only 7 rupees. If you issue debentures, 10%, suppose 50% income tax, your effective cost is only 50%. Because you get income tax benefit. Take one more example. This previous one was okay, I suppose? Huh? Now you see this. Most of the companies do this. I was talking about this. Imagine, this transaction does not affect in this whole of 3 years my accounting profit. How did they pay? It was issued for 750. 250 is the interest. How it was paid? It was paid from reserves. Okay, there was no change. Imagine this thing done by, you know much better than this. HDFC Bank did this, and overnight they lose 300 rupees on the stock price. Do you find, is this correct way of doing things? If you charge less expense, it's your deferred tax liability. If you charge more expense, it's your deferred tax asset. The company should have done what? That I get today 750. That amount has to be converted into 100 rupees after 3 years. My effective interest is 10%. So every year I'll be charging 10%. 750 into 1.1, first year end value. Then again 1.1, then again 1.1. See this, how deferred tax is calculated on this. Rate is origination. And 100 is reversal. I created for 3 years deferred tax asset because I am charging expenses what I am not paying for. Interest account debit to deep discount bonds. Third year it is reversed. So when I create, it is deferred tax expense. When I reverse, is deferred tax liability. That is in respect of only statement of profit and loss. I am not talking about OCI and directly in equity. In accounting, there is no logic and there is nothing is correct. Schedule 3 is wrong, I am telling you. Absolutely wrong. I mean, there are many mistakes. They came out with ICDS. What happened to that? Why did they withdraw? They came out with MAT. Why did they withdraw? Tell me. Companies that section 2040 probably. Changes in equity if required. What nonsense? How can you have if required? Tell me. You will not have retained earnings in a balance sheet? Yes or no? How it can be if required? Share capital, no change, fine. No buyback, no issue of shares, nothing, same. 10,000, 10,000. What about retained earnings? There will be on opening balance, school level knowledge I am telling you, there will be on profit credited, there will be some dividend I pay, closing balance is different. So if I am given two comparative balance sheets, one is 15, another is 35, from what is the source I come to know? How it is increase or decreases. So how they can say if required? Now they have abolished. ISB, IFRS standard also many places wrong, you will find. This thing is very huge, I told you. It is just like your medical science, I mean ocean, this is also like ocean. Just like English, I told you yesterday. Man of my caliber knows meaning of 2000 English words. Good command over English knows meaning of 5000 words. Shakespeare used to know 22,000 words. And dictionary having more than 5 lakh words. Where do you stand? So logic, if you can justify, you are correct. A good lawyer knows only the loopholes of the law. He doesn't know the law. He knows the loopholes of the law. Imagine what happened, what you have done, what is the answer to the investors. You have shown profit 820. EPS, imagine. And actually you should have distributed profit only on 570. It was on 820. Any standard you have sincere desires to learn, please I tell you, go to the standard itself first. Think a while, get in touch with us here. Mr. Mode is there to clarify your queries, no problem. We can share our views. Okay? Next. Only thing I am addicted actually. I don't drink, I don't smoke, but this is the thing for me very difficult to resist. Devana, anyway. No problem. Sir can influence. Deferred tax adjustments make my accounting to follow accrual basis. Current tax plus or minus deferred taxes will make my tax expense as per accrual basis.